Time for a quick market review. And as always, our reviews are coming straight from MacroOps, our global macro research and consulting firm. First up, Bitcoin. We all saw it pretty much crash over the weekend. It fell over 20% at one point on Saturday. But the good news is that it was able to reverse most of the fall, which is why it created a candle like this. And this is a good signal when you're seeing a drop because it means the bulls pushed the price back up. They came in, they were buyers. So right now it's trading around its support, which is the big 50K number. And what we really wanted to see for the bulls at least is for it to hold that line into this week. If it breaks that line, that's a bad sign. It's look out below. And you can see right here in this chart, it is fighting with that level. So we got to see what happens. And you can see the 200-day moving average is right beneath it. So Bitcoin has now put in 3 consecutive weekly bear bars, which is not a good sign, and it's actually rare. There have only been 5 other occurrences, but remember, this is a new asset. So it's 5 occurrences within a small sample size. But what we did see is that every time this happens, it leads to further downside in the weeks that follow. Will that necessarily happen here? We don't know because again, small sample size, as I've said, 3 times, but something you may want to keep in mind. Now, if we're looking at the S&P from October to November, the market put in a very strong run. And you can see that run right here in this chart. Beautiful. But it eventually put in a double top, which was right around here. And now it's putting in a potential double bottom on the daily. But keep in mind, such a short-term double bottom doesn't hold much weight. Though, typically on the first move down after a strong run like the one we saw, you usually see bulls come in and buy it up. So what we want to watch here is for a close below the Friday's low, because if that happens, then yeah, we are going to get that larger move down. And if you look at the chart right now, it is holding, and it's especially holding on that 50-day moving average line. So we got to see what happens. Now, the major indices like the S&P 500 don't actually reflect the carnage that's been going on underneath the surface over the last 2 months, because a large section of the market has been kneecapped. Now, the way you could see that is with breadth. And if we look at the Russell 3000, we see that the percentage of stocks trading above their 50-day moving average fell below 25% last week. This below is a typo, it's above. As you can see here, the number trading above their 50-day moving average, it's at a low, and usually when it hits that low, that tends to mark a bottom when stocks are in a healthy uptrend. So we may see a bounce here, but one of our working assumptions is that we are in the process of rolling over for a larger sell-off. But as always, things don't happen right away, like we saw the S&P chart, right? It's fighting. So you do have to wait and see and let price guide you. Our nervous and numb indicator, which is a MacroOps indicator that measures the technicals of the S&P versus the VIX, you can see it dipped into numb territory on Friday, and that triggered a buy signal, which means we'll probably get a bounce this week. But on the weekly charts, it did trigger a sell signal, which indicates a higher probability that this move lower is just starting. So what you really got to do, like this is the weekly, this is the daily, right? So the daily is going to give you a shorter term signal. So we might see a bounce this week, but longer term, which is why we use the weekly chart, we are seeing things roll over. So you always got to remember your time frames and then what time frame you're trading in. You need to align yourself with the market. Another positive for the bulls though is that credit has briefly turned up. You can see this red line right here turning up, and that's important because credit actually leads equities. So if we see credit turning up like this, we might see equities follow suit. Here's another interesting chart from Mr. Blonde Macro. It shows the S&P's average performance around various tightening cycles, because we know what's happening now, right? The Fed is scared. They're like, uh-oh, maybe this inflation isn't transitory. Maybe we got to start hiking. So if that does happen, we'll likely land in a fast cycle, which is a fast cycle of hikes. And as you can see here, that's this orange line, and you saw that the S&P did not do so great. Here's another chart that shows that the aggregate S&P profit margins look to have peaked. So that's that red line turning over here, which you know fundamentals do affect the stock market eventually. So if this is turning over, you could expect that companies aren't going to report earnings so well, which will lead to lower prices. So Cameron Kreis, a BBG's macro man, he shared a chart that is pretty interesting. And he said even prior to the emergence of Omicron, the expected earnings backdrop has been looking less favorable. And this is once again going to fundamentals because yes, they do affect the price. Currently, analysts forecast EPS growth of just 7.7% next year. So this is one of the lowest expected growth rates of the past 3 decades. And the last time it was this low was the end of 2014, which didn't exactly precede a good period for equity markets. So the fundamentals do seem to be turning in this market. So you are definitely going to want to stay nimble out there. Now, one company that is on our watch list is Ferroglobe, GSM. And this company produces silicon-based metal alloys, electrodes, ferrosilicon, and manganese alloys. So this thing already ran 3,000% off its 2020 COVID lows. So we were looking at it back when it was trading at 70 cents and thought it was worth looking at, but then we thought we missed it. In fact, we did not miss it. But this stock has the key trifecta of macro, fundamental, and technical tailwinds behind it. So we're going to dig more into it, but this is definitely one that you want to keep on your watch list. Now, if you want more weekly market updates like this, then make sure you subscribe so that I could see you in the next one. Talk to you later.